Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago. We start from the global oil market scene as prices rose in early trade to their highest since March as a drawdown of U.S. crude inventories and output cuts by major producers helped ease concerns about a supply glut, offsetting fears over the economic fallout from the COVID-19 pandemic. Brent crude futures for July delivery were trading up 62 cents at $36.37 a barrel, at rising for a second day. U.S. West Texas Intermediate crude futures for July were up 61 cents at $34.10 a barrel, extending its gains into a sixth straight session. Both prices are at their highest since March 11. Energy Information Administration data shows U.S. crude inventories fell by 5 million barrels last week against expectations for a 1.2 million barrels rise, while stocks are the Cochin, Oklahoma delivery hub dropped by 5.6 million barrels. Prices have been boosted lately by shipping data showing the Organization of the Petroleum Exporting Countries, Russia and other allies, a group known as OPEC+, are complying with their pledge to cut 9.7 million barrels per day. OPEC itself is encouraged by the rally in prices and strong adherence to output cut pledges, although sources say the group has not ruled out further steps to support the market. Physical crude markets are signaling a rapid shift from an enormous oversupply at the height of the coronavirus lockdowns in April towards an unexpected undersupply in the second half of the year. Still, concerns about the lasting economic impact from the pandemic, especially in the United States, the world's biggest oil consumer, have applied some downward pressure on prices. The Minister of Transport, Rotimi Amechi, had earlier in March announced that the completion of the 150-kilometer major railway project linking Lagos to Ibadan has been delayed by the coronavirus outbreak as workers from China had not returned to the country. The railway line is set to be developed by the state-owned China Civil Engineering Construction Corporation. The over $1.5 billion project was expected to have been completed in April, but that wasn't feasible. Meanwhile, the Nigerian Railway Corporation had also announced that all train services will be shut down due to the spread of the coronavirus. Now that things seem to be coming back to normal with a gradual easing of the lockdown, what is the fate of the unfinished rail project and what is the way forward for train services in the country? Joining me now to unpack all of this is the Director General of the Nigerian Railway Corporation, Mr. Fidet Okera. Thank you very much for joining us, Mr. Okera.
Good morning, Nigeria.
Thank you. Now, how much of a setback has this COVID-19 problem caused the railway projects in the country?
As a person, I don't look at it as a setback. It's a pandemic, a global phenomenon. As my friends we say, the world is rebooting. And we look at it as, let's say, for instance, in Nigeria, as at March ending, where we are, and anything from there to this time has been taken at zero because it has affected us. And in my place, they say the rain that beat all the people has no effect on a person. So since it's a global pandemic and we are finding a way to go out of it, I think that should be the uppermost thing in everybody's mind.
Well,
because
but that's...
there's no duplicate in life.
Yeah, but that, of course, also caused some kind of setback in some of the projects that the federal government has put in place, particularly this rail construction. Now, the construction of the Lagos-Ibadan standard gauge rail was suspended because of this. That was what the minister had said. How far gone was the project before the suspension?
By the end of March, I think the time schedule, they were matching it up. Because by the end of March, we have gotten to a place called Alagomeji. That is a Butemental Junction. And the train was run from that place to Ibadan at Monia. The portion remaining was to link the port. And due to the lockdown, their workers, the contractors, had to also protect their life. And those of us working with them also have to obey the instruction that we should stay at home, stay safe, and we are still observing that. We are hoping that with the way things are going, and if the final lift of the lockdown, we will still be very careful while working because we're at construction sites, there's a limit to social distancing because people have to work as a team. So we are meeting on how best we can work under this COVID-19 problem. And yesterday we met, we had a virtual meeting with the contractor and find the best way so that they can come back to site and move the project forward. The thing I can say tell Nigerians that right now, by the time we come back, the rolling stocks are here with us. We received 2 sets of DMUs, diesel multiple units, and that consists of 8 coaches of various types, each and 2 what we call motive power, the puller at both ends. We have 2 sets of that. One will be taken to Abuja to support the operation we are doing there, and another one will be left in Lagos. And at the same time, we have received 44 coaches for the passengers, and we have set up the logistics of moving them to their various locations. We are moving 10 of the coaches to Itakpe. Nobody talk about that, and that has been the oldest standard gauge in Nigeria. So we'll be running skeletal service, not commercial. Now that we are going to send the coaches there, I think, God's willing, we'll be able to go commercial. At the same time, we are sending another 10 coaches to Abuja, separate from the diesel multiple unit site. And the remaining 24, plus the diesel multiple unit will be deployed to Lagos, Ibadan. I said we receive additional 6 passenger locomotives. We have moved 2 to Abuja already. We are moving 1 to Itakpe, and the 3 will service Lagos, Ibadan.
Now, still on this Lagos, Ibadan project, no new timeline has been set again. I mean, it was supposed to have been completed in April.
It was supposed to have been completed due to the minister's pressure. It was a 3-year contract in the agreement.
Okay.
But we are saying do it 18 months. So the initial timeline.
18 months?
Yeah.
Okay. Yeah.
That was what
okay, go ahead.
The minister was pushing for. So within the contract period, we are still within the agreed contract period. But because the funds were being paid and they have to work to time because they wanted it finished before that time. So the minister put a lot of pressure so that we can finish before the time. So we are within the contract.
Now, but many have argued that the lockdown period actually would have been a good opportunity for Nigeria or the federal government to actually complete some of the projects, railway, including roads, when you have lesser people on the street. So shouldn't that have happened?
You see, if you say lockdown and you say protect your life, I don't know, I will not risk my life because it's better to be late than be delayed. Indeed, I don't know how your team used to come to a site and they see people. How do you maintain social distance? Well, no matter as help you want us to dress like doctors that are protected themselves from head to toe. And when you do that, you are not going to be able to move iron. You are not going to be able to do the engineering because you need to climb and come down. So we have to observe that and ensure that we protect our lives.
All right. So most of the rail projects are being executed by Chinese. What's the extent of involvement of Nigerians, especially, from a technology transfer perspective?
Oh, you see, I think we are lucky to have the President Minister because as we speak, about 115 youths, if I say youth, not less than 20 years, maximum is 20 years, 18 to 20, are in the various universities in China, not on scholarship by the contracting firm. It was not a part of the cost, but you have to do corporate social responsibility. And at the same time, don't forget the president do the groundbreaking this year, Daura, for the Transportation University, and the Vice President did same in February this year at Kajola for the wagon assembly plant, all to ensure that local content is encouraged. So we give a contract for supply of 200 and I think 280 wagons of various types, and the contract is because we need them immediately, do 40% and supply. The remaining 60 should be assembled in Nigerian assembly plant. I think that is the best we can go.
And what are the scope for public-private partnerships in railway development? What role can the private sector actually play?
You see, we've been saying people can come and join us and operate. But my sister, I won't deceive you, it's not easy and cheap. You see, for instance, at the time at the meeting I attended, somebody he said, the Okada rider can feed the family. Why do you think a train operator cannot feed this family? I asked the question, ask the Okada rider to patch one pothole. Because the cost of the machine cannot patch the pothole. Ask ABC Transport or Chisco to do 100-meter drainage on the road they ply. They would not operate. But in the rail industry, you have to maintain the track. It's the Nigerian Railway Corporation that maintains the track backed by government. So if you have an investor, say, maintain the track, supply your rolling stock, like you say, ABC, do your road, buy your buses and operate, they will not be there. So we have to find a way, and that's where the law, State-owned railway, is looking at the National Assembly, so that the infrastructure, the permanent way track, should be held by government and maintained, not just constructing. Because if you say, I've done the express Lagos-Onitsha, the user maintain, they will not meet up, they will not be able to operate. That is the same thing in the rail industry. Because of the safety, you have to ensure that the track, if you have pothole on the road, you can start to pass through the bush. But when you have a depression or a washout on the track, there's no other way that track must be fixed.
Now, any implication of these delays on the approved funds for the project and, of course, the Chinese source loans?
I don't think so. We are moving very fast, as more than expected. The Nigerian government, has even given indication providing their counterpart funding, raw and physical available. And due to this COVID, I think it's either we are supposed to go to China, the Chinese are supposed to come to finalize and go ahead and start the work. We hope by the time COVID permits to allow people to meet again.
But there has to be a way. I mean, COVID perhaps will not go out anytime soon. But, everybody is trying to adapt to the new normal.
You can talk, maybe we do virtual meeting this morning, not 5 billion naira. We are talking about something over $1. So you have to look at the people talking to you and know their body language, as they say. So that is the position where we are. We hope it's going to work.
All right. Now, late last year, the federal government also approved a $5.3 billion for Ibadan-Kano rail construction. What's the update on that?
That's what I've just discussed. That's what I'm explaining. Okay. That is the one that is on the front burner now, to link Ibadan to Kano. And it's supposed to be segmented into 4 segments so that they can work simultaneously. Before, we are taking about 3 years, so that if you are walking from Ibadan to something like Ilorin to Minna, you have Minna to Abuja, and Kaduna to Kano. Right.
Okay, now a few years ago, there was a proposal to resuscitate the narrow gauge in parts of the country by General Electrics. Yeah. So what's the situation with it now?
Could not come through as expected. And you know that General Electric withdrew from rail business. And they had partners. They were a conglomerate of a consortium of companies. We are still talking with the consortium. And from my mind of mind, I don't think they are ready to go ahead. But however, the government is taking up to come quickly and fix the track. That's where we were before the COVID. We have gotten proposals, we are reviewing them, and the president has given approval for us to go through the normal due process and get relevant approval before we can go in and do the install line. At the same time, we are looking for financial so that we can do the standard gauge. And we also hope by the time we link Port Harcourt to Warri on the standard gauge and link Kaduna to Kano, so that will cover east to north.
So how soon are we going to see cargo from the seaports being moved to different parts of the country via rail?
We are moving. That's up today, even during the COVID, because we require a few hands. We send in the wagon to the port, they load, and the driver, two drivers, and the guard take the train. We are moving. Even when I'm coming up, I saw 20 wagons going to the port.
Yeah, but the train services were, put
passenger train service.
Yes, were put on
passenger
hold.
train service,
yes.
Not goods.
Absolutely. Passenger train service was put on hold during this period. When are you expecting to start off again?
We are doing, you see, in Nigeria, for instance, you see people climbing themselves inside the train. We are working hard to ensure that when we come back, at least with this COVID, people, if we are taking 100 in a coach before, we have to find a way to reduce it to 50. And we started planning how to educate our customers. Nigeria, most people don't believe there is COVID. So we don't want them to find a way so that they will understand there is COVID and obey what we are trying to put in place, so that if we say 50 people inside this coach, they don't force themselves to be 70. That's what we are working on.
To have a social distancing
yeah.
plans. Now, any update on the Agbo Railway construction?
Yeah, the stations are complete. And as I said earlier, the rolling stock to service it, we have 2 locomotives, brand new, and 10 coaches to be added to what is there. And we are trying to move from Pampalan to those 10 coaches to Agbo. It was already approved that we deploy 10 out of the 44 that arrived to Agbo. And we can't wait to start that because we have to break that yoke that have been happening, that particular 302 kilometers good track. So we need to operate it. And the funniest thing is that it will be quicker to go by road, for instance, from Warri, from Agbo to Itakbe than going by road. It's shorter and faster.
Okay.
So,
now, we've heard the Chinese government funding infrastructure, basically, here in Nigeria, and that's a kind of a loan. And here Nigeria is seeking for debt relief from the Chinese creditors. Does it bother you that the Chinese could take over, these real assets to, make up for a default as they have done in some other, countries?
You see, people talk about Chinese loan, defaulting. It's not only Chinese loan. We have World Bank loan, we have all those things. And Nigerians have never,
well, the
Chinese
have always tied their loans to projects, really.
It's better because the money cannot go elsewhere. Because you have to deliver on what the money is meant for. So right now, how they operate is that you tie the money, and so when you work, we pay you. The Chinese pay you. So you cannot divert the money to COVID, for instance. I think it's a better thing, especially where discipline has to be maintained with, supposing if the money is dropped in Nigeria and we have emergency and other things, you say, okay, and the time is to pay the contractor, you can't pay, it's a problem. So I don't have that. I don't think Nigeria have been defaulting their loan agreement. You see, the contract is government to government, and I don't think there's going to be default. You see, the problem we have is that people always tie benefits to dollar, cent, naira, and kobo, which should not be in infrastructural development. We are here, very good infrastructure. If we were in a small place, maybe we cannot do the social distancing. So how do you put that in terms of naira and kobo? So that is,
All right.
infrastructure cannot be calculated in Naira and Kobo and all those things. It's good we have it now because the benefits of having it early quite a way of delaying it. Because are you going to do it for your commands to go up or not? You must do it.
All right, thank you very much. Thank you very much for your time, Mr. Fidet Okera, the Managing Director of the Nigerian Railway Corporation. Thank you for your time.
Thank you. It's a pleasure having me.
All right, we'll take a quick break, and when we come back, we'll look at the Sub-Saharan Africa Eurobond market as well as commodities market update. Do stay with us. We'll begin this segment on the commodities market space with Nosike Nwajide, one of the research analysts with Financial Derivatives Company. Good morning, Nosike. Good morning. Thank you for joining us. Well, part of your burning economic issues there is the monopoly of fuel importation by NNPC, which has been broken now, so marketers can actually bring in their own products. Now, what are the implications of these for the downstream oil sector and, of course, the price of refined products like petrol, kerosene, and diesel?
Okay, typically, okay, this is basically, NNPC has some competition. That's what it means. I mean, you bring in your refined petrol. The ex-depot price for NNPC is 108. NNPC has been a sole importer for the last 2 years. So this monopoly is broken. So other importers can now bring in their own products. But the thing is, other importers are subject to a higher exchange rate or a weaker exchange rate than the NNPC. NNPC will probably get Forex at 360, the official rate now. But other importers will have to go and look for their own Forex, some at the parallel market at 450. So that's a higher price. The retail price is controlled by the PPRA. At the moment, it's 125. I mean, that's, we're in an era of price modulation. We like to think that this is a step towards the gradual or the eventual liberalization or deregulation of the market. At the moment, it's 125 because oil prices are falling. So as now, we've seen oil prices reach 36. So, you know, the import costs will be higher. The ex-depot price will probably rise. So at the end of the month, the PPRA probably likely to set another price. Now, but the NNPC, the exchange rate is where the issue is.
Now, that's a major challenge, because how can you talk about this? Would you see that this is deregulations? Because these marketers are still saying that the sector has to be deregulated.
Deregulated for you know, for you to give incentive to any importer.
And allow the market forces to determine the price. Now, you talked about the exchange rate.
That's crucial to the whole deregulation of the sector. I mean, if you want to even give an incentive for people to invest in refining, so to speak, you need to deregulate prices. I mean, fixing prices at the beginning or the end of every month. Right now it's 125. We're expected to rise even higher. NNPC having access to Forex at a lower rate
why do you
gives it the edge over the competition. But now that you have other importers bringing in products, the market can only absorb so much. So NNPC will probably bring down the amount it imports and allow other marketers to fill that gap. Then you have, you know, depending on how much NNPC lets go, NNPC might be supplying maybe 30, 40% of the market. The 60 is for the oil marketers. So, I mean, if eventually you have a deregulation, then having, you know, the fact that you have a company, Dangote Refinery, going to start refining soon, NNPs will have that at the back of their mind as well. The Dangote Refinery probably needs to import crude oil as well, or buy crude oil from Nigeria at the international market price. So it's subject, and where it gets Forex from, it's another issue. Will it be given the same preferential treatment as NNPC, Forex at 360 as opposed to right now 450? Those are issues that still need to be clarified, because before we can say, okay, the market's actually deregulated or, you know, liberalized. So
well, as it is now, it doesn't seem that the market is deregulated, but I just wonder why the government is still insisting on, you know, regulating the prices.
Well, at the moment, if oil prices there's a lot of volatility. We've seen it at 36. In another month, you might see if OPEC cuts and OPEC plus cuts, if as agreed, take effect, by May, June, Nigeria might cut by another 400,000 barrels down to 1.4 million barrels. If there's, you know, compliance or over-compliance, so to speak, and the global economy picks up, we might see oil prices rising above 40. And that will impact the cost at which we bring in these products, and the prices may rise.
Already, we have seen the prices propping up. The subsidy was removed when the oil price was coming down. Now we're seeing this, you know, the prices propping up. So where does that leave us?
I think oil prices falling presented the chance or the opportunity for the federal government to take away subsidy because of the huge cost implication. Now that's gone, the cost basically is passed on to the Nigerian consumer at a time where there's subdued demand for petroleum products, so to speak. By the time the lockdown is completely off, or has been lifted completely, we'll see the true impact of higher, so to speak. By the time at 125, we expect that crude oil prices will rise even further, and this will affect the retail prices. We might go back to 145 and even higher. And it remains to be seen how Nigerians react. It remains to be seen how the impact on transport costs, for instance, and the impact on inflation. At the moment, we've seen, because of rules bordering on social distancing and all whatnot, buses or transporters cannot carry as much as they would, so their prices have spiked by as much as 50%. So by the time the lockdown is over and those prices will drop, then we'll see another impact from increased petrol pricing as well. So I mean, there's a chain of events that we expect to see in the market.
And we're even seeing Fitch there warning that OPEC plus output cut will plunge Nigeria deeper into economic contraction.
Fitch is assuming that assuming an average oil price for 2020 at 35. Well, at the average oil prices so far in the year 43. If, like I said earlier, if the market just is waiting to see how much compliance there is in the market and how quickly global consumption rebounds, China is back to lockdown levels. The US, the EIA released there was a drop in inventory yesterday by about 4.9 million barrels. So we're seeing all the signs that the market is picking up. So, and if there's a compliance to cut, we might see prices rising to the mid 40s in the next month. So that projection is based on the assumption that Nigeria will cut. Nigeria is more sensitive to production cuts than to price, but in this case, the cut in production is supposed to increase the price, so it might not be as gloomy as they say.
All right, and another burning economic issue there is that the price of bread has gone up by 60%. What's driving this price? I mean, bread is something a lot of people take for breakfast. Are there alternatives?
Alternatives to bread, I honestly doubt that there are alternatives. I mean, you could switch to other things, but they'll probably be more expensive. They'll probably be, or you might, I don't know, people might decide to eat noodles or whatever, but the price of bread going up, basically, the bread manufacturers are complaining of increased cost for all their inputs, really, from flour to salt, to yeast, to milk, butter, everything. The prices have soared for many different reasons. Foreign exchange rate, for the flour millers, they say the forex instability and diesel prices have impacted the prices. So obviously higher
what would
cost.
all of this mean for the inflation numbers? Well, that has been delayed, but I understand it will be released today by 2 p.m.
They won't affect these numbers in the future. By the time, because they haven't increased the prices yet. As soon as we have a 60% rise in the price of bread, it should obviously affect the price of inflation going forward. Food inflation inflation for the month of May may rise to about 13.1, 13.2%.
All right, thank you very much, Nosiki, for your time.
Nosiki
Nwajide is one of the research analysts with Financial Derivatives Company. All right, lately, sub-Saharan African Eurobonds have been enjoying bullish sentiment across benchmark sovereign curves. This is coming after most African countries partially relaxed the lockdown, even as COVID-19 cases climb on the continent. Earlier this week, Nigerian sovereign papers narrowed by an average yield of 31 basis points, just as Zambia and some other major markets continue to improve in appetite. For a better understanding of what is driving this sentiment, I'm being joined by the head portfolio management at Commercio Partners Asset Management, Victor Aluyi. Good morning, Victor. Thank you for joining us.
Good morning. Thanks for having me.
Now, Victor, is it a time to buy, sell, accumulate, or reduce at the sovereign Eurobond market?
Well, I mean, if you look across the sub-Saharan African curve, really, the market has been strong over the last 1 week in particular, but has been so for the better part of this month. And the reason isn't far-fetched. It's basically on the back of the rally or recovery that we have seen in crude prices. Suffice it to mention that across the sub-Saharan African space, we have Eurobond issuance in excess of $43 billion. Nigeria has about 11.1 billion, Angola about 8 billion. Kenya has about 5.1. You have Ivory Coast having about $7.2 billion in issuance. You also have some countries that have about $1 billion or less, the likes of Ethiopia, Benin Republic, and so forth. So clearly, the movement that we have seen over the last week plus and for the better part of this month is essentially on the back of the rally or the strong movement in crude prices. Suffice it to say that Nigeria and Angola in particular are crude-heavy nations. So clearly, the price movement of these papers is very, very responsive to what goes on with crude oil. So clearly, it's the rise in crude that has fueled the sort of rally that we have seen across the sub-Saharan African space.
Kenya, Eurobonds 2024 and 2028 also recorded some of the most sell-offs last week. Yields jumped by about 61 basis points and 71 basis points week on week to 9.0% and 9.1% for each of those papers. What do you attribute to that?
So again, if you were to look across the sub-Saharan African space, yields are up or yields are down by an average of 242 basis points. But if you dimension that even further, you would see that the oil-heavy guys have been far more volatile. So for instance, if you look at from the beginning of this month up until we speak, Angola yields across the Angola curve on average are down by about 790 basis points. For Nigeria, yields are down on average by about 360 basis points. Now, if you look at other players that are not oil heavy, like the Ivory Coast, for instance, yields are down just by 108 basis points. Kenya yields are down by about 70 basis points, while for Senegal, yields are down by 120 basis points. So clearly, the sort of positive move that we have seen across the SSA rally, across the SSA space is basically driven by the strong movement we've seen in crude oil. Recall that, towards the end of last month, crude prices essentially collapsed, but we've seen recoveries starting from, the beginning of this month. We've seen the easing of lockdowns. We've seen, some demand pick up, particularly in the U.S. The EIA released a report yesterday where crude stockpiles went down by about 5 million barrels. The expectation was that it was going to build up by about over 1 million barrels. So that clearly speaks to the fact that there is some recovery in demand. China is back to nearly back to pre-COVID levels. So yes, demand is sort of recovering, and then of course that supply curve that was agreed to by OPEC, the 10 million barrels that was taken out, that started this month. So we're clearly seeing some supply being reined in, and we're seeing demand recover. So on the back of that, crude is strengthening, and that is providing some significant support for the SSA Eurobond curve.
This hunt for double-digit yields on the Nigerian papers as well. UBA 2022, Fidelity Bank's 2022, and the Eco Bank, among others. Where do you see rates heading after this bullish sentiment?
Well, I mean, the truth of the matter is that with the kind of strong run we've seen over the last week plus, there is likely to be some profit taking that would set in as, participants look to take some money off the table. Nevertheless, the overriding factor here is what's going on with the recovery with crude prices. If you also look at the corporate space, the issue there has always been the liquidity. Issuance there is basically in the hundreds of millions, so it's not as liquid as the sovereign space. So the movement or the volatility in that space is not as strong as what you will see in the sovereign space. But I think that some profit taking is likely to set in. Nevertheless, these yields, I think, are on a downward trajectory, except, of course, there's another wave of COVID infections or something negative that happens to crude oil prices.
So what do you make of the pullback from Seplat's 2023 paper? It looks like the impact of the withholding tax on its 2019 final dividend is weighing on the security.
Well, I don't think that is weighing significantly because, again, Seplat is an oil story. Seplat is oil heavy, right? So we've seen that movement over the last week thereabouts. But once that announcement came out, I think it engendered some, what I'll call knee-jerk negative sentiments. But I think that all of that will cool off soon. It's basically the back of the 2020 Finance Act, which created an avenue for withholding tax to be taken on whatever dividend that is declared for hydrocarbon players. So that's obviously having its impact on the name for now. But I think that the strengthening crude prices should help, provide some support to the Seplat going forward.
All right, thank you very much for your time, Victor. Victor Alui is the head portfolio management at Commercial Partners Asset Management. And for Wednesday's market review, here is Temple Ashaju. Temple, the bulls are still winning, but I'm still skeptical about the sustainability.
Well, as long as crude oil price continue to rise, I mean, we're around some $35 per barrel now. That's the good news that is bringing back the FPIs to the market at this point in time. And that's why we got these gains that we recorded yesterday at the equity space. We were up some 1.03%. That translated to some 6.2% gains for us in terms of returns for month-to-date performance. In terms of year-to-date performance, the losses have actually moderated to around some 8.9%. And thanks to what the banks, what the conglomerates are offering a lot of the buyers, the buy interest that we're seeing in the market at this point in time. This also means some 130 billion naira actually for the capitalization of the markets yesterday. Look at the volume of transactions. This was up by some 28% yesterday. We got some 38% gains in terms of addition compared to what we did in the previous trading session. That's in terms of value. And Zenith Bank was the major contributor to what we had in terms of the volume of transaction. It did some gain some 4.1% yesterday, and that's some 75 million units of its shares traded for a whopping 1.22 billion naira in the markets yesterday, and that contributed more to what we saw here in the market. Deals 5,195. Banking sector continues to dominate transactions, but thanks to Dangote Cement, we're just 4 days away from the dividend qualification date for Dangote Cement under the industrial goods segment of the market, which was up by more than 1% again yesterday. And of course, Bua Cement was also up by more than 1%, 1.89% precisely yesterday. PZ, Unilever, all of the major companies that you have under this space. Honeywell Flour continue to improve for the consumer space. Insurance, of course, Lasako Insurance was up yesterday, and of course, a couple of other firms. Oil and gas, O&O was a major mover in that space yesterday. We have Mr. Rotimi Fakayejo joining us now. He's a stockbroker with the Nigerian Stock Exchange. Good morning, Mr. Fakayejo.
Good morning, Temple.
So, great. We have seen that oil price appreciation or accretion has now been helping the investors to return to the market. But what happens if there's another external shock?
Well, the market is very sensitive and very responsive. So if there are shocks, then definitely the market will react accordingly. But I think with what is happening presently, if there is no flashback on the lockdown, globally, I think we are already on a path to greater height for the entire world economy. But be that as it may, I believe strongly that with a lot of industries returning back to work and business, I believe strongly that things definitely will take a new shape. But for the Nigerian market, I think we are still very much at a level whereby investors can still take a lot of advantage. There may still be some upside and downside, but I think investors should remain resolute in holding on to what they have, especially if those securities have good fundamentals and they are the ones that have been paying dividend over time. So I don't foresee any shock in the short run. But even if there is, it shouldn't give investors any jitter to go off their investment. They should rather stay put because we're going to see more entries into the market going forward. And it's going to be a good advantage for those who are making early entries maybe right from now or have made it even earlier.
You don't sound like someone who's in support of an extension of the lockdown. Yes, we agree. But first, the other thing is that Dangote Cement has got the 25th of this month as the qualification date for its dividends. But that's 25th, which is next week, Monday, is actually a public holiday. Do you think we will have an extension for those that really want to still buy? Perhaps waiting for salaries and be able to lock that down for the dividends of 16 naira?
Well, I think normally whenever there is such a public holiday, there's usually a change in the closure date for in the closure of registered, in the date of closure for registers of companies. So I believe that if that happens, there definitely will be a change. But I believe Dangote Cement is actually the leading park in the industrial goods sector, and I think it's still a very good buy even as at now for investors to take part in the dividend and also in future returns.
You sound like someone who's among those that have gained some 32 naira lately since buying from at 117 naira. Thank you very much, Mr. Rotimi Fakayejo, stockbroker with the Nigerian Stock Exchange. Chimaze.
Thank you, Temple. Let's hope that the bull run continues at the end of today. In the meantime, just hang in there. We'll do an opening call to London as well as the debt and currency market after the break. And for updates from the streets of London, here is Juliana Olainka. Good morning, Juliana. Well, Britain sold a government bond with a negative yield for the first time. And after that, the Bank of England governor says all options are open, paving way for a negative interest rate. It seems obvious that UK's recovery from the impact of the coronavirus will be longer and deeper than expected.
Absolutely, Chimeze. Yes, certainly longer and deeper in this purchase yesterday, which is the first time the government has ever sold a negative yield bond, just shows how concerned the Bank of England are. Basically, if you purchase one of these yield bonds in negative territory, it means that you're definitely going to lose money, but an investor would rather lose money now than lose a lot more money later down the road. We did have those inflation details yesterday showing that it's at a record low of 0.8%. The Bank of England have set an inflation rate here in the UK for 2%. There are suggestions that next month the bond purchasing programme by the Bank of England, which is at about £200 billion, will be increased. And as you said, those negative interest rates, which the new Bank of England Governor Andrew Bailey is not a fan of, is likely to suggest that that's potentially what will happen in the UK because the economy is really struggling to recover, of course, because of the COVID-19 pandemic.
Now, with those moves yesterday at the bond market and, of course, the inflation numbers coming in at its lowest level in 4 years, how have the markets opened this morning?
The markets opened in the red this morning. The FTSE opened about 60 points lower. We did actually get some composite PMI readings. So the whole health of the economy has been looked at in services, in manufacturing and in construction. It was at a record low in April at 13.8. It's actually risen to 28.9 in May. Of course, the benchmark is 50. That's what every government wants. Anything above 50 shows that you're expanding. And as soon as those PMI details did come out, the FTSE actually did rise a little bit higher. So it does show that some activity may indeed be picking up again. But inflation is low, unemployment figures are at record high, and business activity isn't what it was in January. But that did push the FTSE up. So there could be hope that the economy may not be heading as badly as everybody seems to predict.
All right, in corporate news, healthcare giant Johnson & Johnson says it will continue to sell its talc-based Johnson's baby powder in the UK and, of course, the rest of the world, despite stopping sales in the US and Canada after claims for years that its talc powder causes cancer. Do you think these claims might dampen demand of this product by UK consumers?
Absolutely it will. Johnson & Johnson is a pretty staple brand, particularly if you've had a newborn baby. When you visit a new mother, you're likely to see that talcum powder in their bathroom. But as you said, over the past couple of years, there have been thousands upon thousands of lawsuits in America claiming that their talc powder does indeed cause cancer. It's obviously something that is drilled. It's one of the softest minerals in the world, but where it is extracted from is very close to asbestos. And we know that asbestos does cause cancer. A lot of these claims have been thrown out of court. There are so many appeals that are ongoing, but Johnson & Johnson is yet to have had to have paid out one of these claims. And they have said, and they stick by their legal team and scientists that do claim that their talc powder is safe. But because of all of the controversy in America, they have decided that they will stop selling their product. Not immediately. There are still hundreds of thousands of their inventory on the shelves, but when they do run out, they will no longer be in sale in North America and in Canada. It will be on sale still in Britain. A lot of those headlines haven't really crept into British press, but there will be some questions as to whether this is safe for our children, particularly as people get more savvy and information is becoming more readily available.
All right, Juliana, we expect more update from you later in the day. And back here on the debt and currency markets, Temple again joins us.
Well, thank you so much again, Chimeze. So we've got the bond market first. Of course, this is secondary numbers for yesterday. We saw that investors continue to look at the shorter end of thing, but with an eye on the 26th of April 2049 security, which is at the longer end of the curve. We know that yesterday, even though the market actually still opened a bit sluggishly, there was a bit of improvement eventually after the DMO bond auction of 60 billion naira, which is well oversubscribed. We saw investors coming back to the February 2028 security. We saw investors also looking at the March 2024 security, and of course, this. That's why all of the valuation or the value of the transactions across these papers came in billions of naira. And of course, if you look at what other numbers or other transactions are brought to this segment, we had 24 deals in total. For the NTB side of things, we continue to see scarce offering there, except for the 31st of May 2021 paper. That's the only one that came in billions, 2.75 billion naira, and you see it's got 4 deals. Puts this together with other transactions, which are retail that we saw on that side of the market. 9 deals is what you have. OMO, that's the open market operations or maturities that you have. Some supplies came in yesterday, actually, from the FPIs, the foreign portfolio investors. That's something that was matched by a little bit of demand, actually, from the local players, the banks, and a few other players that are dominant in the space. But we've got Keye, who's a dealer, fixed income dealer with FSDH Merchant Bank, joining us now to look at these numbers and help us make sense of it. Thank you very much for joining us. Good morning.
Good morning, Temple.
Great. So we had a well oversubscribed DMO auction, bond auction yesterday. I think it was oversubscribed by some 390.7 billion naira. That's almost 400% of what was actually offered. Talk to us about how rates jumped that much, but there was a bit of a crash at the 2035 security.
Okay. The bond auction, the secondary market yesterday was relatively bullish as investors took position on some maturities with yields considered very attractive. This is on the back of the elevated system liquidity. However, the DMO conducted the FGN bond auction yesterday, offering 60 billion across the 3 tenors. But eventually, there was a marginal increase in the stop rates for the 5-year, 30-year, and the 5-year and 30-year bond from 9% and 12.5% at the last auction to 9.2% and 12.6% respectively, while the rate for the 15-year bond dipped slightly to 11.7% from the previous 12%. The auction was actually oversubscribed with an overall subscription level of 708%. In total, 290.7 billion was sold. We expect to see the unmet demand at the auction yesterday to flow into the secondary market today, and it will probably dip marginally.
I guess a lot of dealers like you will still be more interested on the 2035 security, for which they weren't able to participate in yesterday at the auction. But let's get forward looking and look at more debt auctions, bond auctions that the DMO will be carrying out. How much of room do you think the DMO has with rates? Yeah, how much of room do you think the debt management auction office has with rates, interest rates now when it comes to the bond auction they have for June, which has already been revised?
Okay, well, I think the current market situation is to the advantage of the DMO. There is a lot of liquidity in the system, and we expect a normal maturity of about 500 billion in June. So demand for FGN bond is going to remain very strong. Let's not forget the fact that on the short end of the curve, rates are still very, very low. I mean, compared to what the FGN bond is offering. So demand is going to be very strong, and with this, the DMO would be able to manage the interest rate to some extent. So rates, we don't expect any significant increase in rates. Rates will probably remain stable at this level for the foreseeable future.
All right, thank you very much. Mr. Keye Ewejoye, who's a fixed income dealer with FSDH Merchant Bank. I appreciate it. Chimeze, we know that the Debt Management Office has also just released the guideline for the Sukuk bond. It's a 7-year program. They have just released 150 billion naira. That's something that a lot of investors, and I hope you're one,
including yourself. You were very excited when you saw that. Anyway, let's continue to be optimistic that it will definitely go well. Maybe I will try to invest in that. Maybe. All right, that's a wrap on the show. Thank you for watching. I'm Chimeze Obi Iwago.